You need to pay very close attention. Each of those issues you described and others you didn't do find their way into the property markets in all sorts of unexpected ways. So paying close attention to all those challenges is a big part of what any investment manager should be doing. The thing I would say is that over the last 4 or 5 years, the macro trends have been our biggest friends. At the micro level, whether it was leasing, repositioning, CapEx, new refurbishment of office lobbies, redoing the kitchen and apartment buildings, doing a facelift to a shopping center, you could do it, you could not do it, you'd still win because the macro trends were with you. Cap rate compression was with you. Lower for longer meant the real estate generally was appreciating almost regardless of how actively you were managing it. I think that's all going to start to flip. I think you move from a macro tailwind to a macro potential headwind, and that means the micro, what happens at the property, starts to really supersede in importance what's going on in your returns. That means active management of your rent rolls, your tenants, the way in which you're putting money into the building in terms of keeping it fresh, keeping it vibrant, keeping the tenants happy, working with new trends, be it the technology trends of putting sensors in buildings so that your tenants are happy with everything from the air temperature to the retail offer in the building to the way in which the building has internet or accepts packages from Amazon that they've been buying like crazy. All of these micro things get to be very important when the macro trends start to get bumpy or turbulent. So I think you move from a world where macro has helped you to a world where macro can hurt you. That means you need to focus like heck on micro, what's happening at the property. Are you actually doing what you need to do to keep your tenants happy and paying rent and happy they're paying you rent?
Ours haven't. We track capital flows across the globe. I will say we're probably accelerating the development of our business in Asia Pac. We opened an office there in this past spring, and we're growing that at a much more rapid clip than I think we would have thought a year ago because of the capital flows out of Asia. We are doing much more cross-selling. The amount of investors that are looking beyond their borders, whether they're in negative interest rate territory or limited growth prospects, has certainly been beneficial, and people feel like they need to do their homework a little bit more now that real estate is, priced at a premium, and the uncertainty with the geopolitical environments has added another level of risk into the situation.
Well, I think the beauty of investing in direct real estate is that it moves very slowly, and so it gives you the luxury of time to think a little bit and to understand what's actually happening and what the impact is going to be. We are not shifting our strategy at present. We haven't seen any major indicators that would cause us to want to shift our strategy. However, we are waiting and seeing what kind of policy changes will occur, whether it's Brexit and the effect of Brexit on capital flows, or it's Trump and his policies and how it might affect, again, like I said, Dodd-Frank, et cetera, and how that'll trickle down to the real estate industry. But right now it seems not volatile, fairly steady, and there doesn't seem to be significant change that we're anticipating.
Well, you have to be aware of these geopolitical events. You can't be a successful investor without having that awareness and without having the flexibility and the ability to be nimble and reactive. But the advantage we have as a long-term investor is that we can look through some of the noise, focus on long-term fundamentals, make sure that our portfolio is positioned to withstand some of those short-term uncertainties and pressures, and hopefully, as I mentioned, pick up opportunities too. That uncertainty will create opportunities for investors that are well capitalized and able to take a long-term view in those markets. But it's certainly something that we review on a regular basis, look at our strategies on a short-term and a longer-term basis, and make sure that we are going to be able to take advantage of the opportunities as they come.